Welcome back. Let's talk to Jeremy Lyon. He's a consultant at Hobart Capital, a man who's been in the markets, well, since I guess they were invented. Morning to you, Jeremy.
Good morning.
And we've got our very own Rob Double, our political commentator. Morning to you, Rob. Right, Assumption Day, holidays for many in Europe today. Markets are fairly quiet. Let's kick off with politics. Theresa May back on Thursday. Would you want to be back in that hot seat after 4 weeks off on holiday, walking through the Swiss Alps?
Nice and relaxing, but back into the heat of it. The key thing for the government this week is that their position papers to do with Brexit are coming out. So these are what they're going to put to the EU in the negotiations to then negotiate on. So today it's talk of the customs union and the transitional arrangement after March 2019. David Davis is basically seeking to extend the customs arrangement with the EU for up to a 3-year period. The devil's in the detail, though, because the key thing we should know about is, whilst knowing that they want to continue the customs arrangement is good for business, it provides some stability, that there isn't going to be a cliff edge. Whether the government will be able to sign and make trade deals during that new customs arrangement, that 3-year period, that transition deal, is the key negotiating element of this. And it's going to be very interesting to see what the EU come back with and say on that matter.
Jeremy, in terms of markets, obviously the FTSE's fallen back a smidge in the last 10 days. Is this predominantly because of the North Korea, Trump, or is it any part of this Brexit?
It's 90% is the insecurity of the world this last week. Of that's no doubt. But really markets have behaved remarkably well considering. The Brexit side, it's holiday period, and we don't know where the devil we are. We don't.
Should we close the markets in August?
That's a suggestion. No, of course not. Sometimes it gets out of proportion, and the market gets very tight, gets shorts of stock, or stories are bigger than they should be. But fundamentally, of course, you shouldn't close it.
Okay. So you've basically off-air, you're worried about the bond market.
Well, I'm very concerned about the bond market because it's much bigger than the equity market, although it's our pensions, it's the banks' decision, it's banks' free money, it's the trading across borders, it's everything. It's to do with the bond market and the interest rates. And for the last, whatever it is, 7 or 8 years, interest rates have been very tight and very small. And it's a question of how we're going to break out and get a return on your capital. And at the moment, it's going the wrong way in the sense that it's negative interest rates in some countries, particularly in Germany, where it's disincentive to save. If you're going to put money back for your pensions, what's the point if it's going to be worth less by the time you want to take it out? That's not the way it works.
But that's been driving the economy. Effectively, central banks basically banning big notes.
Yes.
Negative interest rates. They want the consumers, me and you, to spend money out there. The politicians want us to have a feel-good factor. New cars, new houses, new clothes.
Yeah, but if it's all done on borrowings, well, it's not healthy.
Well,
it's
there's a 50
lead future payments on our next generations.
Well, lots of sort of clever people are saying there's a 50-50 chance of the UK going into recession. And the worry is that this time around, if something badly goes wrong, we don't have any ammunition left.
Absolutely right. And you need to incentivize people to save a little bit in order for future generations and not leave them in the lurch.
Well, I think it's Bank of America Merrill Lynch is saying that everything is in the right place for a big correction as we go into the fall. Would you agree with that?
I would certainly agree with that, but we don't know what's going to start it off. And we really don't. It's normally currencies of bad flows coming from one place or the other. And it normally happens around October. So we're coming up to the crunch.
Well, Rob, let's go back to you. Final point in this slot. Theresa May, any chance of her stepping down after coming back on holiday?
I think it's very unlikely. There's been the big division in cabinet, the big reason why you change leader is over Brexit and the lack of leadership. these policy papers, they seem to have resolved, at least on the face, the cabinet divisions. It's provided some degree of unity and stability for the party, and there simply is no one who can really take her position. There's been, this week, Silly Season really has produced a story about Jacob Rees-Mogg being a potential Conservative leader of the future. He's obviously the MP for the 18th century, he's called in Westminster, but there is really no one who could provide any better leadership than Theresa May. And so the Conservatives will not get rid of her. Obviously, when the time comes, the Conservatives are very effective at getting rid of leaders they don't rate, but not at the moment, I'd say.
Well, I was always told, don't let your staff go on holiday because they get time to reflect, okay, and they might find a better job. Is there any chance Theresa could come back and say, actually, I've had enough of this, I've messed it up?
Well, obviously, she called the election having gone away and thought about it and mulled it over and then considered, to do it, obviously incorrectly this time. But I think she probably sees it as a challenge. As she said to her 1922 committee, I got us into this mess, I will be the one to get us out of it, it's my responsibility. And I don't think that really would have changed. I think she's probably gone away, had a lot of papers to read, and she'll come back probably ready to go.
Gentlemen, thank you very much. See you same time next week.
Okay.